onwards. But let's shift focus on FMCG, and this was one of the sectors that was expected to lead from the front. Now, low base, improving sentiment post GST were expected to spur volume growth. But how has FMCG actually done in the past? Let's take it away to Mubina Kapasi, my colleague, and she's been number crunching and mapping all the trends. Mubina, how has FMCG actually fared on ground?
Well, if we look at Q3, I think most in the street would give FMCG Inc. a thumbs up. They really haven't done that badly. There's just one company that has actually delivered Q3 results that have come in below expectations. But for the major part, FMCG has actually done well. They've either come in above expectations or in line with expectations. Here's a rough scorecard of what exactly has happened in Q3. HUL, ITC, Godrej Consumer, Dabur, those have come in line with expectations. Marico did pretty well when it comes to its revenues and as well as its volumes, but Emami, that was a bit of a weak link in the quarter gone by. When it comes to volume growth and you try to understand what exactly has been the actual volume growth versus expectations, again, in line with expectations, because HUL delivered 11%, what was expected was 8 to 10%, so that one has been able to beat a bit. ITC was a bit disappointing because, over there was a degrowth of 2 to 3% expected, but the cigarettes really degrew by a good 5%. Dabur as well came in line with expectations. Emami, like I said, has disappointed. We had Colgate, which came in line. Godrej Consumers came in line. Britannia came in line. So it's bang in line with expectations. That's what we are seeing in the volume growth figure. You also saw, of course, how revenues did. And, after many quarters, we are seeing double-digit revenue growth come back, especially for HUL, 10.5% growth. Marico, 15.1% of top-line growth. And for the bottom line as well, it's been at least a 20% jump for most of these companies on the bottom line, despite, of course, the fact that there are certain concerns in relation to margins, especially with input cost growing. But what exactly is the future plan in store? What exactly is the outlook? Well, all the FMCG companies that we interacted with did give a positive outlook. HUL said that they are witnessing a consumer pickup, offtake pickup in rural as well as urban. Dabur has said that they are expecting stronger growth and expect more market share gains. Britannia said that growth in weak states is picking up and they are hopeful of rural pickup in the next 2-3 quarters. ITC was a bit circumspect because, they were worried that, with this high taxation environment, illegal cigarette is only going to rise. The growth in illegal cigarettes will only rise. Nestle also said that they are not seeing any secular shift in demand downwards, but again, they are not seeing a market pick up rapidly either. And Emami as well was a bit circumspect. They have pruned, in fact, their revenue guidance for 2018, FY18 to 12%, and they're saying wholesale channel is yet to return to normalcy. However, once again, they as well are giving rural India and rural demand a thumbs up.
Right, Mubina, fantastic analysis. So let's take that, let's take that story forward when